Now, the tax filing season opens on the 1st of July, and taxpayers will have less than 4 months until the 24th of October to file their returns. Last year, about 3 million taxpayers were sent an auto-assessment by the South African Revenue Service, and this year it's likely to be the same. For more on this, we're joined by Tusani Mnyandu, an accountant manager at Mazars South Africa. Very good evening to you. Thank you so much for your time. The 2022 tax filing season is opening soon, and I suppose one has to ask themselves if they are ready or not. What does it take to prepare for such a season? Because the time is condensed, and it's important that taxpayers are making the necessary provisions and understand the full tax filing process.
Thanks, Mboy. Thank you for having me. Good evening. Well, at this point, really, we are at in process, because what is happening right now is for you to reconcile whatever has been done through this filing season is for the 2022 year individual. So that means that the year ended already on the 20th year, right? So how does tax liability happen? Tax liability happens on a yearly basis. So it says that if you had to owe tax, you owe it for the 2022 year of assessment, for example. So what happens is that you prepay your tax, either by paying what we call pay-as-you-earn, which is employees tax, or you pay provisional tax. So already you have made some of the payments that would be going towards your tax liability. What is happening now with the tax season is for you to reconcile, to say, indeed, this is what I owed and this is how much I've paid already, or this is how much I owed and this is how much I still need to pay. So really, at this point, you've already done most of the work, and it's only just a matter of concluding on what has happened on the 2022 year of assessment.
And of course, certain provisions need to be undertaken to ensure the success of this process. What are those provisions that need to be considered as you embark on this very limited time frame task?
So the South African Revenue Service is charged with collecting revenue in South Africa. So what is happening right now is that they determine when it will open and when it will close. For example, as we said earlier on, that on the first of that's when the filing season will open, and then it will close 4th of October for people that are not provisional. What does it mean to a provisional taxpayer? Perhaps I should clarify that. To be a provisional taxpayer means that you've got other income that SARS does not have a way of verifying with third parties. So let's say, for example, you are renting out your room or your investment property. So there's no way that SARS knows about that particular income that belongs to you. So what that means is that in August, which is the first 6 months of the tax year, you have to estimate and say, okay, I think by the end of the year I will owe this much, and then you make half a payment of that. And come the end of the 28th of February the following year, you also make another provisional tax payment. So what that means is that you are not going to be, your tax season is not going to be ending on the 24th of October, but it will be ending on the 23rd of January the following year. Now, if you are a normal salaried taxpayer whereby you earn normal salary information, so that information is already with SARS as we speak, because your employer would have had to file a reconciliation to say, this is how much I collected from the taxpayer, and this is how much they owed at that point. So that then feeds into the SARS system to then determine how much you owe, how much is being owed to you by the SARS.
Record keeping is also very important in this process, because outside of the IRP5, there are other records that may be submitted for one taxpayer's benefit. Let's talk about some of those things that need to be handed into SARS and need to be considered on a day-to-day, perhaps some record-keeping notes that one would take for granted.
That is a very important point that you are raising, that of keeping records, because that's the only way that you are able to substantiate whatever is sitting on your return. But most of the information will already be on the SARS system. Okay, I think we're going to touch on auto assessment a bit later on. So what happens is that SARS is empowered to collect information from third parties. So those include your employer, for example. They must keep information, and that information, they give you a certificate, which we call an RP5. Your bank, they also have to keep information to say that this is how much interest you earned, and then they submit that information to SARS as well. The same thing goes for if you have a retirement annuity fund or a pension fund. That information gets to be fed to the SARS system. Your medical aid as well. When you go to doctors and you for whatever service that you will be going for, that information is kept by your medical scheme and it is fed into the SARS system. So most of that information would already be on the SARS system. However, you do have additional information that you must keep. For example, let's say, as you have seen now with COVID-19, most people were working from home, and most people thought, okay, then there will be a benefit because I'm having an office that I'm using, and I'm working from home. So what that means is that you need to keep all the information. You need to know the square meters of your house. You need to know the square meters of the room that you are using as an office. And you need to keep all the documents, for example, electricity, if you're paying rent or if you're paying towards a bond. So that information needs to be kept. So you need to keep that information for a period of 5 years after having filed the return. So if you don't file the return, you still have 5 years to keep an obligation of 5 years to keep information after the return has been filed. So I would emphasize that taxpayers, they need to ensure that they keep records so that they are able to substantiate their information. Because when you submit a return to the South African Revenue Service, they can then say, we want to verify the information and then request for such an information. You should be able to do that. Also, you find people that are using vehicles and so on, so they want to claim traveling cost. They need to be able to keep a logbook of when did they travel, on which date, where were they going, and so on. So that is some of the information that you need to keep.
So last year, 3 million taxpayers were sent an auto assessment, and it's likely to be the same this year. What does that really speak to? And what if you don't get an auto assessment? What does that mean?
Okay, so building to what I was saying, that the information gets fed into the SARS system. For example, on the 31st of May, it was the time for employers, it was the last day for employers to submit information from you. So that information is taken, and then, as I said, from banks, from medical aids, and from any other third party that SARS will have, even from overseas third parties, because we also, we also as a country are working with other tax jurisdictions. So that information, even if you have let's say a bank account in the United States or another country, that information, SARS has got powers to subpoena that information and bring it to its systems. Now, what happens is that that information then gets put together. So they look at me, they say, Tusani Mnyandu, they've got my tax number, they put together that information. Now, if your return is what we call an uncomplicated, it's not a complicated return, so it means that you earn one income from one single employer, there's no travel, and there's no other peculiar things about your return. Then they prepare the return. They prepare it so that when it comes to you, it's just a matter of accepting the results. So what they do is they put the information, and then an assessment is done. So what you need to do is to look at the assessment, at the auto assessment. So auto, it means automatic assessment. Mm-hmm. So once that has been done, it means that you look at the information, you open the return and say, okay, yes, no. You look at your RP5 and you confirm, yes, that's the salary that I earned, yes, that's the interest that I earned, and then you're at a point now where you are saying that I can accept what SARS has prepared for me. Then you can say you are filing the return. Whereas if, for example, you've got other things that you want to put on the return. For example, you were renting out your property, so that information is not there. You will then choose to edit the return. And then once you edit the return, you put the information that is not out there, and then you're able to file the return.
Very well, very insightful. Thank you so much for your time. Tusani Mnyandu, an accountant manager at Mazars South Africa. Tax season is around the corner, the 1st of July, giving you some of the very important aspects that you need to know.